Good morning, good afternoon. Welcome, everyone. My name is Sin-Young Park. I'm the Director of Regional Cooperation Integration in ADB's Economic Research and Regional Cooperation Department. Well, it's my great pleasure today to host the webinar. First, allow me to introduce ADB's Chief Economist and then Director General of the Economic Research and then Regional Cooperation Department, Dr. Albert Park, to deliver his opening remark. Albert Park is ADB's chief spokesperson on economic development trends and leads the publication and knowledge products and support regional cooperation areas. He has more than 2 decades of experience as a development economist, working on a broad range of development issues, including poverty, inequality, intergenerational mobility, microfinance, migration and labor markets, future of work, and foreign investment. He has previously served as a founding director of Hong Kong University of Science Technologies Institute for Emerging Market Studies, professor at the University of Oxford, and associate professor at the University of Michigan. The floor is yours, Albert.
Thank you very much, Sin-Young. I want to welcome everyone to today's webinar on emerging financial inclusion priorities in the COVID-19 era. I'm very pleased to see so many colleagues here, and I'm looking forward to a meaningful open policy dialogue. So we know that COVID-19 has made this particular topic very important and timely. First, we know that the COVID pandemic has really exacerbated inequality. It's put millions upon millions of households into poverty, and it's delayed the global efforts to eliminate poverty. And at the same time, we know that the pandemic has accelerated digital transformation in so many ways, which of course creates opportunities for overcoming some of the challenges directly caused by the pandemic. But at the same time, it creates risks that vulnerable groups in the population, especially the poor, women, other marginal groups, will be left behind. And so this report, which provides recommendations on how governments can think about making sure that in this context, financial systems can be more inclusive, is extremely important. The webinar is related to Asia Pacific Financial Inclusion Forum, which is a policy initiative under the APEC Finance Ministers process, which has been providing recommendations to APEC finance ministers since 2010. So ADB has supported this initiative over the years, and since last year became the lead organization, while continuing to closely collaborate with our partners from the Asian Development Bank Institute, the Foundation for Development Cooperation, and the APEC Business Advisory Council. So I want to thank all of our partners for their active collaboration. So to support efforts, as I said, by governments and institutions to make systems more financially inclusive, the 2021 Asia Pacific Financial Inclusion Forum developed a series of recommendations to assist policymakers to formulate digital financial inclusion strategies to support immediate recovery and resilience building, and to explore emerging opportunities and challenges associated with the accelerated rate of digital transformation the region is now experiencing. The outcomes of the report are also based on virtual policy dialogue held last May, which was joined by more than 80 participants, including policy and industry experts from across the region, as well as senior government officials from 15 economies in the Asia Pacific region. The input received from these experts and officials, including the sharing of practical case studies from the region, has been invaluable for the development of the report. Today's dialogue will examine these report findings in further detail. We are very fortunate to have partners from the APFIF initiative, from ABAC and ADBI joining today's discussion, together with an esteemed expert from Bank Indonesia to share his insights. So I'm very much looking forward to today's dialogue, and I want to thank all of you for your active participation. Back to you, Sin-Young.
Thanks, Albert. for a very encouraging opening remark. I would also like to now introduce today's presenters, Peter Rosenkrantz and Sean Hunter. Peter and Sean have been the leading authors of this Asia Pacific Financial Inclusion Forum report, Emerging Financial Inclusion Priorities in the COVID-19 era. Peter is a financial sector specialist in ADB's East Asia department. He focused on supporting ADB's finance sector operations in East Asia. Previously, he worked as an economist in ADB's Economic Research and then Regional Cooperation Department. He worked on a variety of issues relating to financial development, integration, and stability. Joining Peter today is Sean Hunter, who is an industry fellow at the Griffith Asia Institute in Melbourne, Australia. Sean is an accomplished international development practitioner with over 13 years experience working across Asia Pacific region on financial inclusion and digital economy issues. Peter and Sean, you have 20 minutes for your presentation.
Thank you so much, Si, for the opening remarks, and also Sinyang for the kind introduction. I see the slides are shared, so it's my pleasure to kick off this presentation together with Sean. Next slide, please. So as brief outline of today's presentation is that I'll provide a very brief introduction to the Asia Pacific Financial Inclusion Forum, and then we'll provide a bit more background and context of the finalized study, and then focus on two areas that already the Chief Economist has focused on that we were trying to address in this year's report. Number one, using financial inclusion strategies to support economic recovery and build resilience sort of as an immediate priority with the pandemic. And second, look a bit more long-term or medium-term strategies on the post-COVID era and what are the emerging financial inclusion challenges and opportunities. Next slide, please. One more, please. So it's a very brief background to all participants joining us today. So the APFIF initiative has been established in 2010 as a policy initiative under APEC Finance Ministers process, and ADB has been leading this since 2010 and 2021. Objectives in broad strokes are really to identify concrete actions that policymakers can take to expand the reach of financial services, so hence promoting financial inclusion in the APEC region, but with a particular emphasis on providing recommendations and solutions for the underserved. That also relates to building capacity of policymakers and regulators. So over the past decade, the APFIF has examined a wide range of topics, ranging from enhancing consumer protection, lowering the costs of remittances, supply chain finance, among others. Of course, amid an acceleration in the digital transformation of the economy and financial systems, more recently and also last year, the focus has been really on digital financial services and opportunities and challenges of those in view of promoting financial inclusion in the APEC region. So for last year, as mentioned, the two topics we already talked about, but to give you a brief background, we were fortunate to have a virtual policy dialogue in May 2021, which really brought together 18 economies, most of which were from the APEC region, as well as a number of policy and industry experts to sit together in sort of a roundtable format and discuss those priorities. It has been invaluable for developing the report further, and even after the dialogue, we have been in good exchange with the experts and on how do we narrow down the recommendations. So finally, the report has been shared with APEC finance ministers amid the APEC finance ministers meeting, unfortunately also virtual, last year October in New Zealand, and it has also been recognized by APEC finance ministers in a joint ministerial statement as a report, as an output. And then finally, we published it as an ADB report in December. Next slide, please, and I'll be pleased to now hand over to Sean.
Thank you, Peter, and also Sin Young for that introduction earlier. So before getting into the primary issues that we want to examine within this presentation, it's important to provide a bit of context, particularly in relation to how the region has been experiencing digital transformation over the last couple of years as the pandemic has sort of taken hold. So the development and adoption of digital technologies is often linked to the economic development of the region. And in recent years, this connection has come under increased focus as governments try to capitalize on digital transformation as not just a way to support economies, but also to promote greater sustainability and inclusion. However, as a result of the COVID-19 pandemic, the rate of digitalization globally has increased exponentially. Much of this digital transformation has been brought about by businesses adopting technology in ways so that they can continue to offer services during lockdowns or throughout the implementation of social distancing measures, for example. But as illustrated in the diagram on the slide, which compares the average share of customer interactions that are digital before and after the COVID-19 crisis hit, the increased demand for financial services has accelerated the adoption of digital technologies globally by several years. This push to digitize has also been a key element for many government responses to the crisis, with technology solutions seen as a critical component of responses or responding to the needs of citizens. This includes enhanced efforts to accelerate the development and adoption of various e-services, such as digital information sharing systems, e-commerce, digital government-to-person social transfers, or digital payment systems. While specific government priorities have differed between economies based on local needs and circumstances, in low-income and emerging markets, the ability to rapidly distribute cash relief to citizens, including those in the informal economy, has been especially important. The pandemic has also illustrated how economies that have already invested in developing strong digital infrastructure and have actively encouraged digital adoption have been better able to reach and support their most vulnerable communities. A good example of this can be seen in Thailand's Prompt Pay project, which was established in 2017 and which essentially laid the foundation for an economy-wide service for individuals and businesses to receive and transfer funds electronically. The digital services enabled through the Prompt Pay program have significantly increased in value to customers as the pandemic began and demand for remote transactions skyrocketed. So even though this new wave of digital transformation is bringing about many new opportunities to facilitate recovery and build greater resilience for the future, it's also exposing the risks associated with the digital divide. For example, as digital transformation continues to be promoted as a response to the economic crisis, new inequality challenges are emerging. Importantly, the ability to access and effectively use digital services is no longer just an advantage, but is quickly becoming a necessity for many people. Addressing the digital divide is critical to the overall performance of the digital economy, its potential to accelerate recovery, and its impact on the well-being of people at the base of the economy. Could I have the next slide, please? So now we'll look at how financial inclusion strategies have or can be used to support economic recovery and build resilience in response to the economic fallout caused by the COVID-19 pandemic. While the full scale of impact the COVID-19 pandemic has had on economies will likely not be known for many years, early projections have painted a pretty grim picture. In late 2020, the IMF estimated that the global economy had shrunk by 4.4%, representing the worst decline since the Great Depression in the 1930s. Such an impact on economies has had dire effects on the most vulnerable populations, with further estimations, as depicted in the diagram on the slide, that as many as 90 million people could be pushed into extreme poverty as a result of the crisis, effectively wiping out several years' worth of gains in poverty alleviation globally. Even as more recent projections indicate faster than expected recovery for many economies, the immediate decline in poverty is expected to be small due to the expected longevity of the crisis. So as governments turn their attention to how to accelerate recovery in ways that benefit everyone, the importance of bridging the digital divide and building an inclusive digital economy has been gaining a lot more attention. One area which governments could look to for support in bridging the digital divide is the microfinance sector. So microfinance institutions provide crucial services to some of the region's poorest and most vulnerable populations. There's an opportunity here for policymakers to explore interventions which can enhance the ability of microfinance institutions to adopt digital technology and provide pathways for their clients to engage in the digital economy. An example of this can be seen in the collaboration between the Philippine Central Bank and the Asian Development Bank to support Cantalon Bank in the Philippines through a digital transformation program. This program enabled Cantalon Bank to integrate technology into many of its core operations, including migration of its core banking system to the cloud, or to use tablet hardware, for example, for increased field mobility and the ability to offer a broader range of digitally enabled products and services to their clients. The pandemic has also highlighted how the use of digital technology to support resilience among the poor has been less successful in countries which lack key enablers, such as robust digital identity schemes, widespread account access, or interoperable payment systems. This highlights the importance for policymakers to consider the current strengths and weaknesses of their own economy to determine how to prioritize investments. So, for example, again, looking at the central bank in the Philippines, they've recognized the potential for digital technology to be a key driver for their financial inclusion goals. This recognition has been reinforced by the pandemic and the need for more digital services. So apart from creating an inclusive regulatory environment, the central bank has taken a proactive approach to assess what specific factors are limiting digital financial inclusion. And as a result of these assessments, specific priorities have been identified and action plans drawn up to address issues such as digital infrastructure needs, financial and digital education, and improved consumer protection. With over $30 trillion announced in funding by ADB member countries to combat the pandemic, the overall effectiveness of these funds to support the most vulnerable segments, including those in the informal economy, will largely depend on the effectiveness of current financial market infrastructure, especially infrastructure relating to critical components of financial inclusion, such as digital payment channels and digital identification. While there's many useful frameworks out there to assist policymakers with the development of successful digital financial inclusion ecosystems, the importance of promoting innovation to drive new approaches shouldn't be overlooked. More innovation is especially needed to enhance the viability of digital solutions to the poor. For example, in response to the crisis, many governments have accelerated the digitalization of social payments to provide immediate relief to individuals and businesses. However, such solutions have also heightened risks for poor or disadvantaged segments, especially when households are generally more reliant on cash, have limited digital skills, or faced with greater connectivity issues. So innovative approaches are needed to help address these growing issues. Next slide, please. So based on these findings, we've come up with a number of recommendations to support policymakers and regulators on what they can do to support this idea of using financial inclusion strategies to build greater resilience and to support economic recovery. So while not comprehensive, some examples of some of these actions that governments might take are highlighted in the report, and I'll just summarize them very briefly here. So the first recommendation is to support the capacity of microfinance providers to adapt to digital technology to drive financial inclusion and bring the benefits of the digital economy to their clients. So more specifically, this can be done by promoting and ensuring equitable access to digital infrastructure among microfinance providers, including support for interoperable payment systems to help close the digital divide, or expanding investment in key digital infrastructure areas. Governments should also consider developing and promoting a fully functioning digital identity system to help microfinance providers carry out due diligence requirements and enable greater participation in the digital economy. And lastly, opportunities could be explored to further develop policy and regulation to support innovation and technology development, which could enable new and effective models for microfinance institutions to introduce technology solutions which could aid those at the base of the economy. The second recommendation is to prioritize investments in open digital ecosystems that accelerate digitalization of payments, leading to inclusive recovery, resilience, and financial inclusion. Some examples include supporting the development of responsible digital ecosystems through investments in platform design, architecture, and technical support with the aim of reducing systemic exclusion of the most vulnerable groups from a large range of financial services, facilitating the creation and implementation of good governance to address new and growing risks arising from increased digital and financial transfers, or supporting growth of a vibrant technology community, including open source technology startups and civil society stakeholders who have a major influence on overall user experiences. And then the third recommendation in this area is to support innovation as part of the COVID-19 recovery strategies. So, for example, this could be support for building the infrastructure for digital finance, which focuses on digital access for as much of the population as possible, and achieving the needed combination of sovereign digital identification, simplified account opening, and systems that enable effective data collection and usage. Furthermore, there could be designing regulatory approaches that are risk-based, tiered, and proportional, so that as risk increases, so too does regulation and supervision. And then lastly, providing support for the wider data ecosystem, including the development of a framework for data collection and use, and to enable data support development while minimizing associated risks. So that concludes my portion. And I'll now be happy to hand it back over to Peter, who will talk about the emerging challenges and opportunities.
Thank you so much, Sean. And so it's my pleasure to conclude this presentation with looking into the emerging challenges and opportunities presented by COVID-19 pandemic, but more specifically, if we look a bit more long-term perspective. So how does potentially post-COVID era look like? And what are potential priorities that policymakers could already now focus on in order to promote financial inclusion? So, as mentioned before, but it's as a vivid reminder, the digital transformation really continues to accelerate across the region, and hence governments need to consider how this actually will reshape a post-COVID-19 era, and then what would be the implication on financial inclusion when designing potential strategies that may be country-specific. There's a wide range of implications of the pandemic and on financial systems, on the fintech ecosystems, which really creates opportunities, but also challenges at the same time. And yet that really has to be carefully considered by governments. And one point here we found in the report is, in order to leverage that, it will really be important to also look at a number of potentially new dimensions that financial inclusion is driven by or can drive. So recent research by ADB, actually by Xin Yang and Roger, demonstrates that the impact of financial inclusion varies significantly across income groups, so and also dimensions. So, for example, access and usage, and hence that really underpins the importance of considering various aspects when tailoring financial inclusion strategies, such as economic development and the status thereof, income distributions, demographics, of course, and a big issue for also Asian economies. Is there some market structure, market concentration that may impede or promote financial inclusion? How about infrastructure or even digital infrastructure, more importantly? So these dimensions, and most notably the ones that are really being boosted by the COVID pandemic, are really worthwhile to look at in greater detail when tailoring financial inclusion strategies moving forward. We also found that partnerships are key, and by which we mean that there are fintech providers, and they often team up with, let's say, traditional financial institutions or banks, but often the outcome is more on ultimately providing digital financial services, not necessarily to the lower end of the, so to speak, income pyramid, but more to the big corporates or to the big banks, despite huge potential and business growth opportunities when providing those services to the poor. So promoting in that aspect greater stakeholder cooperation will really be key to also have good and fruitful collaboration ongoing among all stakeholders, including fintech providers and banks, allowing to also team up with smaller banks and provide services for those that are most in need. And then last point here would be really, and it's also in relation to the chart, you can see on the right-hand side that there are vast infrastructure gaps. As we know, there are generally considerable infrastructure challenges and gaps in Asia Pacific. But what you can see on the right-hand side here are estimates by the World Economic Forum on the digital infrastructure financing gaps. And you can see that this is growing rapidly, this projection, especially for Asia. It would be an annual gap by 512 billion by 2040. And please note that these estimates are pre-pandemic. So given the transformation of several sectors and digitization of the economy amid the pandemic, these may even be underestimated. So there's a vast need of financing needs to finance critical digital infrastructure, also to promote financial inclusion. And in order to help bridge this gap, there are really opportunities offered by new innovative financing mechanisms, which are beginning to emerge in some markets. So, for example, fintech financing mechanisms such as asset tokenization, blockchain-based project bonds, or crowdfunding solutions could potentially be used or assessed to what extent they can help mobilize the necessary finance that is needed for digital infrastructure. Next slide, please. Wrap up. This would be another set of policy recommendations based on the previous slide. Number one would be to reassess financial inclusion strategies to consider the growing use of digital financial services. We would suggest to consider building a digital transformation roadmap, but also really within the context of financial inclusion and considering critical dimensions, recognizing the impact of that financial inclusion varies depending on economic development, but also other characteristics as mentioned before, such as market structure, demographics, or the current state of digital infrastructure that's provided. Second, or well, actually we call it number 5 because we have 6 recommendations, would be take steps to promote greater stakeholder cooperation to progress digital financial inclusion at the base of the economy. And that was mentioned here, to promote the cooperation, also to reach the lower end of the income distribution. One example could be, for example, fast-tracking regulatory licensing for microfinance providers to go digital by, for example, leveraging frameworks rather than treating each digital journey as a standalone case, and providing standard, for example, open application program API could be one way to go to streamline reporting requirements and thereby also providing the right incentives for this needed stakeholder cooperation. And last is really explore the potential of innovative fintech financing mechanisms for digital infrastructure financing needs, as just discussed. That would be really to explore those potential emerging technologies such as asset tokenization, blockchain bond, as mentioned. At the same time, of course, what will always be important here, so while exploring the benefits and prospects of these innovative financing mechanisms, always to also keep in mind that keep a balance between financial innovation, but also, of course, financial stability and consumer protection that is needed. All right, so I think let's go to the next slide, please. And that concludes our presentation. And we, of course, look very much forward to any questions and especially to the upcoming panel discussion. Thank you so very much.
Thanks, Peter and Sean, for the very interesting and useful presentation. We'll now proceed to the panel discussion. We are today joined by esteemed colleagues with considerable expertise in this field who will share their insights and perspective in this area. Each panelist will have 5 to 7 minutes to provide some brief remark in relation to this APFIF report and also the theme on emerging financial inclusion priorities in the COVID-19 era. So let me first introduce today's panelists. First, Lisette Cipriano. She is a senior digital technology specialist from the finance sector group of ADB. Lisette has expertise in payments, card acquiring and issuing, and alternative payment methods garnered from her experience working in Europe, Africa, and Asia and the Pacific. She's currently working on a project that involves new technologies that to drive financial inclusion, such as digital ID, cloud technology, and central bank digital currencies. We also have Julius Seeger Prenes, who is a senior advisor of the Daiwa Institute of Research. He also coordinates the Asia Pacific Financial Forum. He presents the APAC Business Advisory Council in the APAC Finance Ministers process. Previous to this responsibility, he also served as senior advisor at Mizuho Bank and the Bank of Tokyo Mitsubishi. JC has authored over 100 publications on finance and economics. Ricky Satria is the director of Customer Protection Group, SME Development and Customer Protection Department of Bank Indonesia. He's been with Bank Indonesia for 23 years now and has spoken on several domestic international events on financial crisis, financial inclusion, fintech, digital payment, etc. Also the Indonesian payment method using the standardized QR codes with the mobile banking applications and e-wallets have been also one of his responsibility. The Peter Morgan is senior consulting economist and vice chair of research at the Asian Development Bank Institute in Tokyo. He's been with ADBI since 2008. He has 23 years of experience in the financial sector in Asia, most recently serving in Hong Kong as chief Asia economist for HSBC. His research interests are macroeconomic policy, financial sector regulation, reform, financial development, inclusion, fintech, financial literacy, and financial education. So I'll first invite my colleague Lisette to share her thoughts on theme emerging financial inclusion priorities in the COVID era.
Thank you, Sin Young, and good morning, everyone, and thank you for having me here and for giving me the opportunity to participate in this RC Pod webinar. It's really good to connect, although virtually, with like-minded individuals who continue to pursue closing the gap on financial inclusion. So I'm going to be echoing a lot of what Peter and Sean have said earlier, and and I'm just really going to supplement what they said. As mentioned earlier by them, the COVID-19 pandemic has really accelerated the need and urgency for digital transformation in many sectors, and not just for the finance sector. The pandemic has certainly exposed weaknesses in financial systems and has made many who have taken the payment experience for granted realize just how important and ingrained payment is in our day-to-day lives. Digital readiness across Asian economies vary considerably, and the technology-related policies and regulation that support and enable financial services really needs further development. If we are able to remove friction points in digital onboarding of individuals, open the gates for financial access to products and services digitally, not just for individuals, but for MSMEs as well, we will be able to narrow the financial inclusion gap and boost economic activities, as digital financial services has the capability to scale, reach those in far-flung areas, and provide services more efficiently, securely, and conveniently. Having said that, there are risks and challenges that we all face. Data privacy and cybersecurity are front and center of all things digital. It is important that capacity in this area is built, not just for financial institutions and regulators, but also for individuals. We need to experiment more and be more creative in delivering financial and digital literacy initiatives to people, such as using virtual reality technology. One such creative initiative was a pilot on farmers in Uganda, which garnered a promising 45% retention rate versus 7% in a traditional setting. In the interest of time, what I would say would be my top 3 recommendations for supporting the building of inclusive digital economies are: first, really ensure equitable access to digital infrastructure. Steps need to be taken to close the digital divide for all participants in the ecosystem and expand investment in digital infrastructure. For example, data connectivity remains to be a massive, massive challenge across the region, especially in rural areas where rural banks and MFIs operate. Furthermore, for various reasons, non-banking financial institutions still do not yet have access to national payment systems and infrastructure. Enabling access to ecosystem players with appropriate risk mitigating measures can provide a more competitive environment, facilitate interoperability, and provide efficiencies in traditional banking. My second recommendation is to consider the development of a fully functioning digital identity system. And digital financial services is strongly anchored to the broader need for digital identity. According to the World Bank, about 1.5 billion people have no means of identifying themselves, and about 3.4 billion have some form of legal recognized identity, but are unable to use their ID for effectively online, and thus limiting their participation in the digital economy. If designed and implemented properly, digital ID, among many things, can facilitate the unlocking of economic value in the country, close the financial inclusion gap, and help rural banks and MFIs carry out customer due diligence requirements more efficiently. And lastly, develop enabling policy and regulation for new technologies in close coordination with other government agencies that also support innovation and technology. Policies and regulations in data privacy and protection, data sovereignty, digital identity, harmonized wallet and prepaid SIM registration, and cybersecurity all enable digital financial technologies, but they don't necessarily sit under the remit of one regulator or the financial regulator at that. So these all require close collaboration for implementation and supervision. To conclude, really the digital economy is becoming more pervasive in our day-to-day lives, and we need to ensure that everyone is able to participate when needed. While I have not deep dived on potential risks that technology can bring due to time constraints, used properly, digital technology can be an enabler for reaching people and can close the gap on financial inclusion. As I also said earlier, this too can impact many other sectors. Within ADB's finance sector group, we are looking to do more cross-sectoral initiatives such as agriculture and finance, health and finance, social protection and finance, appreciating the fact that digital finance can be an enabler to many other sectors. To realize the full benefits of digital technology for financial services, we must all continue to work together. Let us collaborate and find creative and clever ways of leveraging the potential gains from technology while mitigating potential risks. Thank you very much. Over to you, Senyang.
Thanks, Lisa. That's very interesting remarks. Allow me now to turn to JC for his intervention and thoughts. JC? While we are waiting for JC, perhaps we can move to Pak Ricky first. Pak Ricky, can you share your experience from Indonesia?
Yeah, thank you, Sendiang. Good morning, everybody, and all participants and colleagues. Thank you for having us here to share our experience. So when we look at where we are now, especially in Indonesian case, we reach level of financial inclusion in terms of the account ownership reached 61.7%, slightly increased 6%. That for Indonesia is quite huge because we got a lot of population compared in the region. And also the increasing of the usage of the account itself. This is due to the higher in the urban area and grow faster in the rural area. We got so many productive age that can open an account a digital way. And also our bank and non-bank mostly focus to provide application to reach all the segment. This is because we introducing the Indonesian payment system blueprint in 2019 that comprise of the 5 vision. Can you share? This is the slide. You see in the first vision that's focus on the financial inclusion. So we leverage the advancement of the technology, but we fully aware the risk behind that one. That's why we try to balancing between the innovation and also the risk. This blueprint comprise of 5 initiatives. Next slide, please. When you look at what the Peter, Saul, and also Lucius share, we do it. This is guide us how to increase and accelerate the digital economy inclusion. We got the API to connecting bank and non-bank, to connecting the technology to the public services. And we focus on the, what do you call it, the retail payment. One of them that we already implement in 2020, which is the QRIS. This is QR Payment Indonesian Standard that already fully interconnected and interoperable. So we start a step by step. And this year, we also introducing the fast payment. They call it BI Fast. We will expand it also to continue how to do a cross-border payment using this QRIS and also the BFIs. The way why we doing that one, we are using the design thinking approach. We said it's like the fintech office in our organization. So we do collaboration with the industry, especially with the Payment System Association to find the solution to our problem in the financial inclusion. Moreover, in the supply side, data implies that people also shifting from cash transaction to the non-cash transaction. This is also triggered by the implementing QRIS and the BFIs, and also we also push the card payment scheme to our people. And not to mention that we also try to modernize the G2P, the government assistance to the poor people. We are in the pilot scheme now by testing the QRIS by using the customer presented mode as well as the face recognition payment. This is to assist the people doesn't have any device in their hands. So QRIS we implement in 2020 has reached more than 15 million merchants currently. Then we suspect more than 80 million Indonesian can use QRIS because for the customer, this is totally free. However, from the merchant side, especially for the small micro merchant, is we provide with industry a free discount MDR, merchant discount rate. Only for medium and large merchant can get charged. Then we expanded as well how the data can be leveraged to provide financing, whether for the merchant, that mostly SME, and also for the customer to make it easier for them. That's why we do. We start small, then we expand it. See what's the opportunity where we can assist the people and the economy. So lastly, MSME have adapted also shift to the digital-based business model because the COVID pushed them to move to the digital way, provide online and offline business, So many application is free. You can learn from YouTube. You can create a Facebook. You can use TikTok. You can use the Instagram to sell your product. On top of that, so many e-commerce come out in our country. So many ride-hailing and courier provide the assistance to connect between the customer and the SME. We try to connect them, Then we push using the non-cash payment, let's say by using the KRIS. So since the COVID, I believe you also know that WHO also encourage us to use contactless payment for the daily financial transaction. And this is we see push factor come out from the market, SME, and also the people try to avoid to get the COVID. So thus, national policy must be focused on the balancing innovation with the risk mitigation, so that digitalization can become a game changer to integrate economy and financial. We are fully aware when you embrace the digital way, new technology, always there is behind that one. That's thing that we need to focus on parallel with the expanding the digital financial inclusion. Not to mention, we found that increasing of the fraud, such as the social engineering, SIM swap, account takeover, brute force to take your data. That's how we try to focus on to assist the financial inclusion health. Because we are not focused only to provide the product, the mechanism, the platform. We need to think the process and the people, how they can do transact in the safe way. That's what we do. So when you look at in our vision and also in the initiative and the fifth initiative, you can see the supervision, the data policy, the cyber security that will guide us to make it happen. Soundness of the digital economy and the financial inclusion. So based on the blueprint of the payment system, then we expanded some the aspect that can meet the demand of the people in the market, try to solve the issue from the government side and also from the people side, such as the cruise. We have now 5 models, Merchant presented mode, where the buyer scan QR from the merchant, the bank and non-bank only provide the sticker in the merchant side. We also have the model customer presented mode. Customer provide the QR scan by medium merchant or chain shop, We also do the pilot cross-border QR payment to assist the tourism, also the merchant with the Thailand and also Malaysia. This year we will to expand to another country in Asia. We also expand the cruise to use to have the function of the transfer, so you can transfer money to assist the remittance later on. That's our idea. And also, if there's some areas still need cash and how to top up your balance, we provide cash in and cash out in the merchant. We are in the pilot scheme now using the KRIS. Then we also introducing our API national standard last year. So it seems it's quite on the right direction, guided by our framework in the blueprint payment system. And the last one that I mentioned previously is focus on the customer protection. We are trying to modernize our the customer protection by using subtech and encouraging the industry to implementing direct tax. Now we are trying to creating the framework first on how to do it before we creating the prototyping how to do it in the customer protection things. Not to mention, we got a lot of the MSME. Most of them is the micro segment. This is also the targeting of the financial inclusion market. The way what we do during the COVID, we collaborate with the government. Government introducing one national program that we call it National Movement on Product of Indonesian Product. So every month we launch the product for each different province, and carry many programs to SME until end this year. So this week we launched in the South Sulawesi, after we launched last time in Bali on North Sumatra, the similar thing to assist the SME because COVID slightly hits the SME. That's why we need to assist them.
Thanks so Pak Ricky. I think we will have more opportunities to share a lot of detail, the Indonesian experience.
Yes.
Let me turn to JC to share some initiatives, probably like from the also the APEC community.
Well, thank you. Thank you very much, Xin Yang. And I'm very glad I came after Ricky made this presentation because, the point that I want to make is really that there is already a lot of work that's going on in terms of government initiatives all over the region. I mean, Indonesia, as we have seen, is doing a lot of things. Thailand is doing a lot of things, Singapore, Philippines, and many other economies. But also very interesting is what's happening on the private sector side. There's also a lot of things going on, introducing new technologies and actually achieving what we have always said must be done. And Indonesia is again another fine example. We had a discussion last year where we had a presentation from one of these Indonesian fintechs called Invest3. And this is a fintech company with a very an excellent background in Islamic finance that has really been able to provide a lot of access to a lot of small enterprises in the villages and in the small cities in Indonesia. And basically, what this company has done is it has connected all the different players in the B2B ecosystem. So they introduced an API connecting the sellers, buyers, and all the financial companies, and that this has enabled the collection of data for SMEs through their transactions, providing data that enabled banks to use this data to expand their lending to MSMEs. Because normally, if you don't have data, it's very difficult for banks to actually lend, and that has really made a lot of headway, especially because of the use of Sharia compliant financial instruments, which of course is very important if you want to reach the small villages and the small cities in Indonesia. So that is the good news. A lot of things are going on, and this is just one example of many that's going on through the region. The not so good news is that this involves a lot of many moving parts because you need need consumer protection, you need data protection, you need cybersecurity, uh, and you need a lot of enabling technologies, enabling policies and regulations from different agencies. So you need a whole of government approach in order for this to succeed. And this is the challenge that many economies are dealing with because the digital world is a new it's a new world for them. And so some economies have, for example, like Thailand, established a ministry that is in charge of coordinating the all the developments in the digital world. Um, but in Indonesia, I understand always the challenge that our colleagues in Indonesia is that there's so many government agencies, plus because of the decentralization, local governments also have an important role. So there's a lot of need for coordination, and that is just at the domestic level. At the regional level, it's also important to have regional coordination and collaboration among government agencies because um, maybe it's right now it's good that governments are taking these initiatives and there's a lot of things going on in the private sector, but unless these efforts are coordinated, our region could fragment into digital islands, thus making it even more difficult for the region to achieve its goal of economic integration. So, for example, governments have been introducing data localization policies, which make it more difficult to, for cross-border data to flow, which is very, very important. And of course, the introduction of new privacy laws. So these need to be coordinated in order to have more interoperability across economies in the region. I think that is already starting to happen. Like, for example, there are efforts within ASEAN, for example, to address this. But this is something that's very complex. And so without addressing these issues, we have, the risks of gaps in consumer protection, data protection that would expose many vulnerable clients, as well as small, micro and small enterprises to various risks. And also we have the loss of opportunities from the lack of ability to scale up these very positive initiatives that's going on, especially in the private sector. So this is I think the challenge. A lot of the things that Sean and Peter have mentioned as recommendations, many of these things are already being put in place. But I think what we need, more importantly for the region, is really a whole of government approach, regional cooperation, and more collaboration and coordination between the public and private sectors in order to really make this effective for the purpose of financial inclusion. So I'll stop there.
Thank you. Okay, thank you, JC. Well, last but not least, for ADB colleague, there's a echo. Can everyone actually turn off the mic? Let me invite our ADB colleague, Peter Morgan, who, Peter, you have done actually a lot of work on the financial inclusion and then digitalization. So perhaps you can elaborate your research findings on how COVID-19 has impacted this, the household firms as in your study and other sectors.
Thanks very much, Xin-Yang, and I'm delighted to be able to participate in this forum. And also, ADBI has been very pleased to support the Financial Inclusion Forum over a number of years. We've also been doing a lot of work to track the impacts of the COVID-19 pandemic on households and small firms in the Asian area, and specifically looking at the ASEAN region. So let me describe some results of our survey. So we did surveys of households in 7 ASEAN countries. We collected information on the household characteristics, income and income changes, employment status, receipt of government and other aid, expenditure changes and coping strategies, experience of financial difficulty, and in particular, the use of fintech products and services. So we were trying to see what the effect of that use has been. Next slide. So we asked questions about the use of fintech-related platforms, such as raising capital or taking loans, paying suppliers, getting payments from customers, purchasing or ordering goods for the business, posting or selling products online and other purposes, and also looked at the changes in the use of digital platforms since June 2020, whether it was higher, lower, or unchanged. And we looked at a lot of specific uses there too. Next slide. So this next slide shows the impacts of COVID-19 on the performance of firms in the this is actually a somewhat later period of the pandemic versus the earlier period, as opposed to the comparison with the pre-pandemic period. But even so, we still see the bulk of firms in most countries seeing declines in revenues, some seeing no revenue at all, and only very few seeing increases in revenues. So the impacts are still quite broad and severe. Next slide. And if we look at the actual operation of firms, we find that 87% are still operating, but about 9% have temporarily closed and 4% have permanently closed. So about 13% being highly negatively affected by the pandemic. And again, that varies somewhat by country. Relatively large negative impacts in Malaysia and the Philippines, less so in Laos, PDR, and Vietnam. Next slide. And so now we're looking at the interesting part. This is the adjustment of business practices by household firms since the pandemic started. And what's interesting is that the adoption or the increased use of internet platforms is actually the most common kind of reaction in most countries since the pandemic started. So that we see overall 14% of respondents shifted toward greater use of internet platforms, and those ratios were particularly high in Indonesia and Malaysia. So I think that this certainly underscores previous evidence that was cited in the report that there has been acceleration toward use of fintech as a result of the pandemic. Next slide. And we've actually been trying to do some work to relate the use of fintech to the firm performance. And so these are very preliminary results, but when we look at the effect of fintech usage on firm continuity, it's actually positive, and it's actually negative correlated with firms being temporarily closed or permanently closed. So that suggests that firms that used fintech were more likely to continue in operation and less likely to close either temporarily or permanently. Now, I should stress that this is just correlation at this stage. We don't really know which way the causality is running. Is it more successful firms that use fintech, or did fintech actually help them to survive? But this is an area for further study, and we're certainly going to be looking into that. So let me stop there. Thanks very much.
Thanks, Peter. That was a very interesting survey, and then the results. Well, let us have some follow-up discussions. Lisette, what has been the most significant challenges facing the microfinance institutions in adopting technology and then providing the digital financial services?
Thanks for that question, Sin Young. Well, funny you asked that question because we just concluded a digital needs assessment for the MF NGOs in the Philippines. So really the digital capability of MFIs vary depending on their size, as well as their capabilities and their available resources. So it may be no surprise to all that for MF NGOs, some of the processes are actually majority of the processes are predominantly manual. They have a basic entry-level core banking system or loan management systems, but they also have aspirations for digitization. However, they do have IT resources limitations. And on top of that, obviously, they have funding limitations as well. Most of them operate in rural settings where data connectivity is challenging. They are also lacking in terms of interoperability. But some have been creative. They have partnered with fintech providers as well, leaning on partnering with these fintech providers for loan collections. And a lot of them don't really know where to start in terms of their digitization journey. So what we did for them was really help them developed a framework for them to help them think through the different areas of their business and operations so that they could craft a digital strategy for themselves, which they could submit for us to us for assessment and also for potential funding. They do require a lot of help, some of them a lot of hand-holding, but it is not an impossible task.
Thanks, Lisette. Well, I want to actually turn to Pak Ricky. It was actually very interesting to see so many initiatives undertaken by the Bank Indonesia to help the SMEs, and then and actually we've seen the take up of the QR codes in digital payment quite a lot of ASEAN countries. Can you share with us, like in terms of these initiatives driven by the central bank and the government, like what worked and then what didn't?
Sorry. Thanks, Chin Yang. Good question. So I think what we saw until now, the president pushed us, all the public sector, to be digitalized. Leverage this one, the public services. And COVID coming in, I believe COVID is the main actor for the digitalization, And government see COVID hits many segments, right? So it's like blessing in disguise when we come up with the digital payment implementation, not framework anymore. Then we collaborate. Many government love to us. In fact, the government strengthening to creating the task force for each province to make digitalization, whether for the government acceptance, lets people paying distribution and tax. And also we asking collaborate with the association, whether with the e-commerce, with the SME, that's what we do. The challenge is that the mindset, it's the same basic problem for the financial inclusion. The mindset to use non-cash. Then how to create the product, process, mechanism, platform that meet their value. You know that based on the many survey, many agent dormant, many account dormant. Because you push the product, not the value for them. Then you strengthen it by the government program. That's what we do, step by step. Because when we are creating the product for the financial inclusion, it's costly for the bank. Because this is very, small in terms of the frequency. So we are creating the ecosystem in the end of the day, together with the government, with the industry. That's what we do.
Thank you. Well, JC, I was also struck by your comments about the cross-border financial transactions that are slowly also digitalized. Can you share with us, what are the challenges and the risks coming from the digitalizing the cross-border transactions?
Yes. Well, I think the challenges are very similar to what regulators have been facing on the domestic level, and these are, the gaps in consumer protection, the gaps in privacy, cybersecurity, fraud, and criminal activities that are, using, cross-border transactions. So these are very important, especially for, vulnerable groups and micro and small enterprises who do not have the resources that large companies have to deal with these challenges. So these are the risks that are there. However, I think that actually regulators are very much aware of these risks. And so what's happening is actually they are too cautious, especially when it comes to cross-border transactions. And that's why there's been a lot of focus on data localization, and that a lot of these regulations or the lack of adjustment to to interoperability has really slowed down the process of development of digital finance across borders. So this is I think the problem, but the solution is really for governments and agencies and regulators to come together to use regional platforms like APEC to provide solutions for this development of standards, for example, best practices and sharing of experiences. So this is, what is needed. And, there are a lot of opportunities that can be realized if governments take a more active role in doing this.
Thank you, JC. Couldn't agree more with these discrepancies in the national regulations about the cross-border data flows. And then I understand actually the APEC has introduced these, the guidelines and then initiatives on making the progress in the data flows, cross-border data flows. Like, can you share us, some, like what is the updates? Like, what are the progress in the this cross-border data flow initiatives by APEC?
Yeah, well, this still at early stages. So all of the work of APEC on digitalization is still at early stages right now, and I think the issue has been that this, as I mentioned, all of these enabling digital transformation really requires a whole of government approach. But the thing is, this involves ministries and agencies beyond trade, foreign, and finance ministries that have been the traditional participants in the APEC process. So APEC is now involving increasingly, these agencies. So, for example, the involvement of new agencies that are created to handle digitalization issues in the work of the APEC Digital Economy Steering Group. So, the chair, for example, of the DESG in APEC is part of Thailand's new digital economy and society ministry. And also the involvement of privacy commissions, for example, in the work of the data privacy subgroup. So right now the focus heretofore has been on the CBPR, the cross-border privacy rules, but this is too expensive for small and medium enterprises to use. And so there has been a lot of talk about broadening the focus of cross-border the data privacy subgroup. For example, to focus on how to enable the use of privacy enhancing technologies, which could go around the privacy rules that MSMEs can use. So these are example of this is the secure multi-party computation, where you can actually get the information you need by putting the data in there without anybody actually seeing the data. It's the machine that analyzes the data and gives you the information that you need. But for that to happen, you need to talk to regulators and policymakers to enable the use of these technologies.
Thank you, JC. That's actually fascinating. Turning to Peter, your result is very interesting, although that's not really, the causality. I do understand that, there has been a really wide kind of a take-up of, the digital applications and then digital payments during the COVID. So do you see, though, like some challenges for these household firms, which are really micro, right? In taking up these digital solutions for their businesses?
Yeah, so I think, as you said, they have limited resources, and in many cases they may be in rural areas where the internet infrastructure is not so well established. So I think they face all the usual challenges. Now, and again, it will vary by the size of the firm. Typically, the larger firms will be in a better position financially to make use of these services. I mean, one of the things we found very generally in terms of the use and take-up of fintech is that it's actually the households which have higher income, higher education, that sort of thing. So that in terms of really getting to the bottom of the pyramid, there's still a great difficulty. And if anything, without, I think, some policy interventions, there's a risk that fintech adoption could tend to widen various kinds of divides as opposed to actually narrowing them.
Thank you. So let me actually come back to Peter. Like drawing on your earlier research, you actually did a lot of the studies on the kind of like effects of the financial literacy and then financial awareness. Do you see a gap in the financial literacy that might actually contribute to the digital divide and then making it difficult to adopt these digital solutions, applications?
Yes, well, there are are 2 points. First, we distinguish between the kind of conventional financial literacy, which is knowledge of financial concepts, things like interest rates, compound interest, inflation, asset diversification, and there are already surveys which can measure that sort of thing reasonably well. There's still plenty of debates about it, and again, we find that typically there's a very high correlation of financial literacy with household income, levels of education, that kind of thing. So there's already kind of a built-in bias or divide, as it were. And then the second point is that when we're talking about fintech, the concept of digital financial literacy becomes very important. I mean, people have to know what kinds of services are out there, what are the risks if they fall afoul of the system somehow, what are the ways that they can try to seek redress, so that there are all sorts of risks out there in terms of vulnerability to phishing, identity theft, exploitation of personal data. It's a whole new world, and it's still kind of a wild west. So that I think again, those people who are less well educated and are generally in disadvantaged groups are going to be at a significant disadvantage in using these new kinds of services unless there's some kind of intervention which helps to raise their level of digital financial literacy. So I think countries have established, in many cases, financial education policies, but I think that not much has been done yet in the area of digital financial education, and I think there's a real gap there.
We have also the questions from the floor, from Young-Hui Kwan. Can you elaborate how regional cooperation integration help enhance financial inclusion in Asia and the Pacific? I think, well, perhaps regional cooperation. How about JC? How about you? You want to tackle this question?
Sure. Well, a lot of things actually have been happening, and APEC. Let me just cite APEC as an example because that's what I'm more familiar with. So policymakers have always placed high importance on financial inclusion, but they started to focus on using APEC as a platform only about a decade ago, and this was at the time when the Financial Inclusion Forum was launched in 2010 upon the suggestion of ABAC, and the Financial Inclusion Forum has been a very good platform for regulators in the region to come together and share best practices, share experiences, and when they go back to their to their home economies, and they are able to apply a lot of the learnings that they've done. And this is something that has been going on annually since 2010. So a lot of progress, I think, could be attributed to what regulators have learned in that forum, as well as in other forums like the AFI, Alliance for Financial Inclusion, and others. Also, there are regional schemes that have actually been developed that lower the costs and improve the convenience for micro and small enterprises. Like, for example, the online dispute resolution scheme that was introduced by the APEC Economic Committee. So that's an initiative that really reduced drastically the number of days that it required for disputes to be settled, between, and especially it's important for small and micro enterprises, because they don't have the resources to pay for the legal services, unlike the large companies.
Thank you. That sounds really interesting. Well, I have also one of the very fascinating, interesting question. Is there a potential for cryptocurrency DeFi in contributing to financial inclusion? I know Lisette has recently led a study on the CBDC. Lisette, what do you think?
Cryptocurrencies, very controversial.
Especially also DeFi. I think
yeah, and DeFi as well. Yeah, definitely NFTs. These are the main topics that that's really fronting the headlines. It's still very difficult to answer. It's still relatively new. As you know, with cryptocurrency, it's relatively volatile. And for the majority of cryptocurrency users are the ones who are quite digitally adept. And so I think if it has potential and if it will contribute to financial inclusion, it will take some time, especially for those who are financially excluded, those in the rural areas who are less digitally adept, who are not as digitally literate. There are a lot of discussions happening globally around, central bank digital currencies, stable coins, and there's a huge debate whether countries should launch their own CBDCs, and governments are really treading carefully and doing careful studies, piloting, researching on the potential impact on financial stability, how it could really, are there really efficiencies that it can bring? So there are positive, not results, but findings that it can potentially help with wholesale CBDC in terms of cross-border transactions. Some developed economies have tested this, and it seems like it's working, but still, it still requires further assessment. So I hope I answered your question. Difficult to say. There was no clear answer to that, unfortunately.
Thank you. Well, I think there's, like a cryptocurrency is actually even a smaller portion, and then there's as Miss Lisa mentioned that the digital currency, whether it's a private or like by the central bank, there definitely potential for the efficiency gains. But you can also expect that this use of the digital currencies, the cryptocurrencies, and especially with the DeFi, there's certainly the risks to the financial stability, like who's going to regulate these, completely decentralized, fragmented, financial platforms operating like all independently. And so I do feel that there's some knowledge gap. So Peter, do you see some research potential in there?
Oh, there's certainly research potential. I would tend to perhaps agree with Lisette that I would tend to see the greatest potential in the area of cross-border transactions. I mean, the basic kind of sad truth of cross-border transactions is that for individuals, the transaction costs are still very high, and there are some ongoing experiments with CBDC conversion that I think could potentially promise to reduce those costs very substantially. Yeah, I don't really see a lot of application of cryptocurrencies with it for domestic transactions. I think there are lots of issues with regard to scalability, again, monitoring, regulation, that kind of thing. But I do think that the cross-border transactions are potentially a fruitful area.
Thank you. Well, we have a regulator from the region, actually. I'm going to turn to Pak Ricky for the final remark. We've seen also, even in Indonesia, there's this QR code driven by the public, like in the central bank, actually. And then I kind of wanted to also ask you that, what are the sort of advantages and the disadvantages, for these digital options driven by the public sector versus kind of like a fragmented, independently driven the private sector solutions?
Yeah. So basically, QR is not BI,
it's not a defined. Mm-hmm.
Yes, this is collaboration with industry. This is really huge. So we try to creating the ownership to the industry. and we facilitate them. We see the advantage for the national approach because you see our level financial inclusion is quite different compared to the peers. We can say they're quite low. So we need something that quite big together with the bank and non-bank by leveraging the digitalization of their product and mechanism together. That's why interconnection, interoperability is really important. That's one factor in the financial inclusion that you need it to reach to the last mile. The disadvantage for the QRS, yes, we try to make it important one for our country, not for the player that have the big pocket. It's quite different. But if there is an idea from them, private idea, we open for the sandbox, as long as benefit for the national, not for their own shareholder. Let's make different our approach. You can up an idea, we open for that. Let's discuss it, do it together. Make it faster. This is our approach. We not what do you call it, ban the idea from the private, but things this country, this economy needed. That's why we
Okay, thank you. Sounds good. So public support with a good sort of a sandbox approach, I think will provide some solutions. Okay, well, thank you very much for everyone to tune in today, and we have actually used up the time that we were all allocated. And this is very fascinating and then rapidly developing, the topics of, the research and the practice. And I do hope to see more and more, really expressing the interest and then as well as providing us the insights to this issue. So thank you for joining today. And then I would like to also thank all the presenters and then the speakers. Bye-bye.
Bye-bye. Thank you, Sonia. Thank you,
Bye.
colleague, the
Bye.
participant.
Thank you. Bye-bye.
Bye.